Internal Revenue Service IRS tax news. Some taxpayers may need to make estimated tax payments. IRS tax tip 2020-115, September 8, 2020. Some taxpayers can earn income not subject to withholding. For small business owners and self-employed people, this can mean making quarterly estimated tax payments. So quarterly estimated tax payments are going to be necessary if you're earning income and it's not going to have withholdings being taken from it. And of course, you're subject to tax, meaning it's over the threshold where you're going to be having the taxable income. So in other words, if you have W-2 income, you are paying the IRS out of your paycheck because the employer is required to do so, taking withholdings out of the paycheck. Now, many more people might be doing some side jobs because of the strangeness of this year, picking up some side work, picking up some business income. So if you're doing something else where you're going to get like a 1099, or if you're a contractor of some kind, then you basically have your own business and you're going to be needing to report that income on typically a Schedule C. And if you're reporting income typically on a Schedule C, then you are going to have to pay taxes on that income. Now, if you have a W-2 job as well as you're picking up this other income on the business, then you may be able to up the withholdings on your W-2 income to cover the added income you're picking up elsewhere in other areas. So that might be one option that you can look into. Or if you can't do that, or if you're making more money than can be withheld from your W-2 wages, or you're doing all contracting work at this point in time, then the IRS is going to want their estimated payments as the time is passing. So just like if you're working in 2020, thinking about taxes owed in 2020, the IRS usually takes the money out of your paycheck, or they force your employer to take the money out of your paycheck and give it to the IRS as the year goes. And the idea being that at the end of the year, if it was a perfect system, you would be filing in 2021 for 2020 tax year, and it should be just an information return in a perfect world. You should be just saying, hey, look, this is the income I made. This is how much my employer took out of my wages. It matches exactly to the taxes that I owe, and therefore I don't owe any tax. I wouldn't get any refund. Obviously, it's not a perfect world because the tax code is way too complex to exactly match the tax that will be needed. Therefore, they typically withhold too much, resulting in you having a little bit of an overpayment, a refund at the end of the year, or when you file in 2021. But the reason you want a refund is so that you're not subject to penalties and interest. So in other words, if you're not filing, if you don't have W-2 income and they're not taking the money directly out of your paycheck, then you want to be paying them quarterly so that you can avoid penalties and interest for late payments. So and that's what's going to have to basically happen for sole proprietors and mainly sole proprietors, that if you're getting some type of W-2 income, you want to look out for that. So anyone in this situation should check their withholding using the Tax Withholding Estimator. That's a pretty nice tool. So it's more of a projection tool, because remember, the tax code is complex now, especially when you have households that are having all these different types of incomes. Most people work in multiple jobs now. You could have multiple jobs in one year, whereas that wasn't, really normal for a long time. But now it's just the norm, and you could have multiple people in the household that are picking up income that might be on one tax return. So you need basically an estimator tool to figure out what your withholdings are going to be. And this withholding tool, or this estimator tool on the IRS website, is becoming more and more something like that. You can actually do like projections on it. So you want to go to this tool if you picked up some side work and look at it, and then figure out what your total estimated taxes are going to be this year, and then think about how you're going to pay them. Can you increase the W-2 withholdings in order to pay them if you had some income that's outside of your W-2 job? Or do you have to pay the IRS and then think about making your estimated payments at this point? And if you're doing that now, of course, you'll have catch-up payments, so you might have to pay a little bit more at the end of the year, and then think about do the same thing next year and figure out what next year is going to look like, and then you can make estimated payments that will be more evenly dispersed throughout the year. So if the estimator suggests a change, the taxpayer can sit a new Form W-4 to their employer. So if you have an employer, you're getting W-2 wages, then you want to change your withholdings so that they take the money out of your paycheck. And if you could do that at the end of the year, it might be more worth doing, because withholdings Note that withholdings, the IRS basically kind of assumes that the withholdings were taken out of your paycheck evenly throughout the year, even though you might up the withholdings basically at the end of the year. So you might, whereas if you make a payment right now, then you're making it later in the year, and the IRS you may still be subject to penalties and interest for making a later payment, and at the end of the year. So you may want to be able to adjust the withholdings if you can, and if you can't, then because you don't have withholdings, then you're gonna have to make a estimated tax payment. Now remember, when you file the Form W-4, the tendency is to go to your employer, and ask them about the W-4 and what does it mean and how many withholdings should you have. Remember that the Human Resources Department is trained not to talk to anybody about any tax advice. So they may seem cold when you ask them, but they're trying not to give any tax advice, right? So if you try to ask them what their withholdings should be, then they're going to say, go ask your CPA. So when you go to the people at your employer, just remember that you're just giving them the information. So you might ask them for the W-4, or you can get it on the IRS website. Use this tool, figure out what your withholdings should be, fill out the W-4, and when you go to the Human Resources Department, it's just a bureaucratic transaction. You're like, here's the new information I'd like you to put into the system and make it work based on this W-4, right? It's not an advice type of thing. The advice that you might want to get is going to be from your tax preparer or CPA firm. So here are some important things taxpayers should know about estimated tax payments. Taxpayers generally must make estimated tax payments if they expect to owe $1,000 or more when they file their 2020 tax returns. Aside from business owners and self-employed individuals, people who also might need to make estimated tax payment include sole proprietors, partners, and S-corporation shareholders. It also often includes people involved in the sharing economy. Estimated tax requirements are different for farmers and fishermen. So if you're a farmer, if you do farming activity or fishing activity, there's a lot of things in the tax code that are kind of specific to these industries. So you want to talk to a tax preparer that knows these things. A lot of if they don't know these things, if they don't work in that industry a lot, they don't know them. So talk to someone that knows about those specific industries if you are involved in them. So corporations generally must make these payments if they expect to owe $500 or more on their 2019 tax return. The remaining deadlines for paying 2020 estimated taxes are September 15, 2020 and January 15, 2021. Taxpayers can receive these forms for help figuring their estimated tax payments. So you got the Form 1040-ES, estimated tax for individuals, and the Form 1120-W, estimated tax for corporations. Taxpayers have options for paying estimated taxes. These include the direct pay from the bank account. So these are the options once you figure out, what you owe the IRS. How do you pay them? Well, if you have estimated payments, you can use the direct pay. There's a link to that here, and pay from your bank account. Paying from credit or debit card or the electronic federal payment system. So note that if you pay from your bank account, you shouldn't have any fees involved. If you pay with a credit card, however, the IRS, I don't believe, charges a fee, but you might get a fee from the processing service, the third party that's going to process the credit card. So you might have an added little fee there. So mailing a check or money order to the IRS. So mailing it, you can mail it in there, paying cash at a retail partner. You can even pay cash. It still amazes me that they work with it. So if you want to pay cash, you can you can look at the retail partners and figure out where to go to pay cash, which is interesting. So taxpayers who don't pay enough tax throughout the year may have to pay an underpayment penalty, and that's what you're trying to avoid, of course, when you're paying quarterly. So in other words, when you pay during the year, like if you're paying in 2020, it's not like you're paying in 2020 your taxes so that you can have a happy day and have a refund when you file the tax returns in 2021. If you can hold on to your money longer and pay all the taxes on April 15, 2021, instead of taking it out of your paycheck for the entire year, that would actually be better. If you can hold on to the money and not spend it during that time period. But that would be better because you'd hold on to the money longer. The reason that you don't do that is so that you don't have to be subject to penalties and interest, which the IRS will charge you if you don't make payments throughout the year as you earn the income. So that's the point. We're trying to avoid the penalties and interest, and that's why we usually aim for a small refund because that means if we undershoot the amount of withholdings, the amount of tax payments, you'll still have this buffer so that you won't owe penalties and interest. So that's kind of the goal. So more information, you have the publication 505, Tax Withholding and Estimating Tool, and there's a link to that here. There'll be a link to this in the description.